We are going for this equation of business. Whenever any company, when it is taking into account the business of sole trader or partnership business, we'll call that thing as equation of business. And the sole trade business or the partnership business, they will be termed as selling businesses, and the company which is taking the business of this sole trader or partnership will call that thing as purchasing business. When we go for equation of business, two things we have to take into account. Two things will come into picture. Okay, when new set of books are opened and when same set of books are contained, these are the two things that we have to take into account. And in this process only, the equation of business, that is taking of the sole trade business or partnership business by a company, will be considered. Now, when we go for this new set of books are opened, we have to take into account how the purchasing company will show the business, the assets and liabilities of sole trade business or partnership business, how they will be shown, and what is the accounting treatment that we come across. The accounting treatment is nothing but passing of journal entries, then preparing of the balance sheet in the books of the company. That is, the sole trade business or the partnership businesses are said to be seized. That is, they are going to be closed, and they will be taken over by the company, and we will record how the assets and liabilities are taken by the company in its books and how it will show them. Before going for equation of business, one thing you have to keep in mind is the purchasing company has to pay some amount to the selling businesses, whether it may be sole trade business or partnership business. And whatever it may be the price that was paid by the purchasing business to the selling businesses, we'll call that thing as purchase price or purchase consideration. Unless otherwise they won't purchase, they won't pay the price. The businesses, they are not going to give them. Anticipating some benefit, the selling businesses, they will give their businesses to the purchasing company or purchasing business. Anticipating some benefit. And when they cannot able to run, the another point is when they cannot able to run the business properly, or when they come across some malpractices or differences in the course of business or in the running of business, then they will come to a decision that we have to give the business to any person. In this context, I am going to tell you one example. Suppose if you are living at one place and all of a sudden you have to go to another place. So what you will do is, whatever it may be the luggage and whatever it may be the articles that you can able to take, you will take. And some articles or some commodities which you cannot take, immediately you will dispose of. Okay, it means that you don't want to take those things along with you because it is very difficult for you. Some commodities which can be taken, which are very, very important, okay, for the continuation of life in that area, you will take. And some items which you cannot able to take, you will dispose of that. And why you dispose of that? What purpose you have to dispose? When you are taking other items, you can also take these things. But thing is, we can able to purchase. There is no necessity for us to carry all these big luggages, big commodities. We can able to purchase, we can able to go with free hands, we can able to purchase. There also, why should we carry all these things? With that opinion, some people, they will dispose of. In the same way, the partnership businesses or the sole trade businesses, what they will do is, when they cannot able to run the business on sound lines, on smooth lines, they will always concentrate to sell the business. Suppose if they cannot able to sell, and if no one is coming forward to purchase the businesses, then they will close the business. So before closing the businesses, they will always concentrate to give the businesses to another business. So like that they will think, and they will also anticipate some benefit. When we are giving the business, here the business means nothing but the assets and liabilities of the business. When we are giving the assets and liabilities to another one, automatically we are going to get some benefit. So anticipating that benefit, they will give preference to sell their businesses to another business. And when the purchasing business, when it is taking the business of the selling businesses, it has to pay some amount, and that amount, whatever it is paying, we'll call that thing as purchase price or purchase consideration. Compulsory, when you go for acquisition of business, this purchase price or purchase consideration is compulsory. And how this purchase consideration will be calculated, and how the purchase price will be determined. Okay, there are four methods. There are four methods to know the purchase consideration. What are the four methods? Lump sum method. This is the oldest method, and it was completely outdated at present. Okay, that is nothing but lump sum method. By taking the assets and liabilities of the selling business, giving some lump sum amount to those people, you can decide about the purchase consideration. That is the first method. The second method is net assets method or net worth method. So net assets method, what you will see in this, they will take into account all the assets. They will add them. That is total assets. And from the total assets, whatever it may be, the outside liabilities, they will deduct that. And the net result, the net quotient, they will call that thing as net assets, and it is equivalent to the purchase consideration. And this net assets or purchase consideration, they will pay in the form of shares or in the form of cash. Sometimes in both the cases, in both the ways, in both the forms, they will pay the amount to the selling businesses. This is nothing but net assets method. After this net assets method, net payments method. Net payments method, that is the purchasing business will pay in the form of shares, in the form of debentures, and in the form of cash. Sometimes in all the ways they will pay some amounts to the selling businesses, taking into account the number of shares what they require, the number of debentures what they require, then cash amount what they require. All these things they will take into account, and according to that they will pay the amounts to the selling businesses. So that's why we will call that thing as net payments method. So there in net payments method, the purchasing business will pay in the form of shares, in the form of debentures, in the form of cash. Sometimes in all the three forms they will pay to the selling businesses some amounts, okay, and those amounts must be considered as purchase consideration. And one more method is, okay, shares exchange method. Fourth method is shares exchange method. So taking into account the shares in the selling business, the new business or the purchasing business will give some shares, okay, in the business, and this thing they'll give at market prices. See the peculiarity, they won't take into account the cost price or the face value. At market price they will decide how many shares we have to give and what is the market value, and according to that only they will give the shares to the selling businesses. So that is nothing but shares exchange method. In these four methods we can able to calculate the purchase consideration. Unless otherwise there is no purchase consideration, you won't come across any acquisition of business All the people, they have to keep that in your mind. Unless otherwise there is no purchase consideration, okay, there won't be any acquisition of business. Just simple. When you want to sell a house, okay, how you will anticipate the money? How you are, the buyer, he will anticipate some money from the seller. The seller, not buyer, the seller will anticipate some money from the buyer. So that amount, whatever the seller is anticipating, whatever the buyer is ready to give, we'll call that thing as purchase consideration. Simple. So in the same way, they will go for this. Okay, fine. When you go for this, separately opening, there you have to take into account the journal entries that how a purchasing business will prepare. So here the journal entries are 3. Okay, first one is business purchase account data to liquidator of selling. Business purchase account data to liquidator of vendor company, vendor business. This is for purchase consideration. This is a due entry for purchase consideration. The second entry is for transfer, for taking over the assets and liabilities. Various assets account data to various liabilities account to business purchase. Here you have to observe that if the credit totals, if they are more than the debit totals, their difference must be shown as goodwill. If debit totals are more than credit totals, the difference must be transferred to a separate account known as capital reserve. Okay, these two things you must understand and you must follow. Once again I am repeating. Okay, first one is various assets account data to various liabilities account to business purchase account. If the credit totals, if they are more than debit totals, the difference, whatever it may be that you come across, must be transferred to goodwill account. If debit totals are more than credit totals, the difference, whatever you come across, must be transferred to capital reserve account. Okay, this is the thing that you will come across. Okay, the third one is for payment of purchase consideration. And how you are paying the purchase consideration. Liquidator of selling business account data to cash account, to share capital account and debentures account. One thing you have to keep in mind is when you are going for net assets method, okay, the payment must be done only in the form of shares as well as cash, or in both cases. You should not consider the debentures. You should not consider the debentures. That is, you should not give any debentures. You won't come across any debentures. But when we go for net payment method, there you have to take into account the shares, the debentures and the capital. That is the difference that you must observe when you are going to net assets method and net payments method. Okay, now this is how you will come across. And when you come across this next thing, that is when we go for the okay, this thing I am going to tell you in the next class.